Growing your net worth can be achieved in a variety of ways. Investing in stocks and real estate may give you with a steady stream of income, while also allowing you to put money aside for a rainy day. After the uncertainty and financial effect of COVID-19, these are lots of attractive possibilities. In order to begin investing, you must first choose which type of investment is best for your situation. Hey, what's up you guys? Capital Finance here. If you're still thinking about where to invest your money, then this video is for you. Here, we will discuss the difference between investing in real estate and stocks. Now, it is possible that real estate investments are safer because of the lower volatility of real estate than equities. Investing in real estate is more difficult than doing so in stocks because of the lower liquidity of real estate, but selling stocks and getting your money back is much easier. But that's just the basics. Let's look at the difference between real estate and stocks. Real estate versus stocks. It has sparked a lot of controversy that investors in real estate says it's the finest investment they've ever made, while those in the stock market say the reverse. Truth lies somewhere in the center. Both sides are correct to a certain extent. We must, however, examine each of them in further detail in order to discover where the problem lies. Regardless of where you live, real estate is quite pricey, to say the least. It's not uncommon for people to dedicate their whole lives to acquiring a single piece of real estate, as was likely the case with your parents. You need a lot of money saved up before you can invest in real estate. When it comes to the stock market, you may get started for as little as $5. If you have a few $100s, you may become an investor in one of the world's top firms, such as Apple, which is trading at roughly $150 per share. Of course, this depends on the stock. It's no longer necessary to pay a broker to buy stocks anymore, thanks to applications like Webull, which allow you to do it for free. There is a high transaction charge when it comes to buying and selling real estate. However, this does not necessarily imply that the stock market is doing well. It is significantly more dangerous to invest in the stock market. The stock market and individual companies are tough to examine. Our current boom era may be near its pinnacle, and your investment might lose up to 40% if you don't get out of the market before it collapses. Nothing is too large to fail, as history has shown us. Apple, for example, is a major corporation, as was Nokia at one point. In fact, Apple was once on the verge of going out of business. Stock prices fluctuate on a daily basis for a variety of reasons. Inexperienced investors, as well as more seasoned ones, have been known to lose money in the stock market because of this. Real estate, on the other hand, is a different story. Land underneath it will always be valuable as long as this building is located in the city. Even in times of crisis, the value of a home is rapidly restored since everyone needs a place to sleep. One of our most basic needs is being able to own a home. It's nice to know that if you purchase a house, you won't have to worry about finding out the next day that it's lost half of its worth. Real estate is also a good investment since it provides a steady stream of income. It's one of the few assets that can give a significant, dependable income with a dividend yield of 7, 8, or even 10%, even if rent prices rise. In contrast, a dividend yield of 5% or higher is highly uncommon for any corporation. There are, of course, firms that pay dividends, but they are hazardous stocks that might lose you more money than you could possibly gain through dividends. However, it may also function in the reverse direction. The stock market increases in value more rapidly than real estate. In 2021, the S&P 500 increased by 28%, while house prices rose by an average of 3.8%. During the last decade, Amazon's return on investment was 1,209%, while Netflix was 3,767%. You won't find returns like this in the real estate market since corporations always innovate to keep ahead of the competition in the stock market. Amazon has grown from a startup to a multi-trillion-dollar enterprise in just 25 years. A harsh competition will eventually bring you down from the heights of success. It's not like owning a piece of real estate and collecting rent every month. One of the two ways to deal with taxes is by filing a return. You're only becoming richer on paper if the stock price rises to 1,000%. As a result, you'll have to pay a capital gains tax, which ranges from 20% for long-term investments to as high as 37% for short-term transactions, in order to realize that riches. Multiple options to minimize taxes and use that money to enhance your wealth are available with real estate. For example, you can deduct the interest part of your mortgage payments on your tax returns instead of paying for the full property immediately. Depreciation can help you recoup the cost of a rental property. Net losses on investment properties are common, even if they really provide positive cash flow due to depreciation. This loss is removed from your regular income, as are costs like utility and insurance. When selling a home, you might avoid paying capital gains tax if you buy another one. Real estate has a lot of tax advantages. There is, of course, a dark side to the story. Real estate, unlike stocks, involves a lot more work to make a decision on whether or not it's worth your time and money. It might take weeks or even months to locate even one suitable rental home. That's only a portion of the story. Finding good renters who can pay their rent on time and take care of the property is only one of the many problems you'll face while renting out your home. There is always something that needs to be repaired or replaced in the house. Costs and expenditures will rise as a result. That implies you may not be able to relocate to a new city or state, as your property may need you to be present at all times. Investing in the stock market, on the other hand, doesn't come with the same level of stress. You have the freedom to go wherever your heart desires. All you need is a smartphone to keep tabs on current events and the performance of your portfolio. There are also endless opportunities in the stock market. I prefer the stock market because it can teach you more about business than a 4-year bachelor's degree can. Before you invest your hard-earned money in a company, you must thoroughly research its finances, cash flow, and history in order to make better judgments about its potential. You must also familiarize yourself with the company's goods and sales in order to make an informed investment decision. On top of that, you must have a thorough understanding of the processes of the economy, the role of banks, and so on. As a result, if you ever decide to establish a business, that expertise will serve as the foundation of your enterprise. There is more to the stock market than simply buying and selling shares. In today's financial system, there are more ways to earn money in the stock market than most people are aware of, such as shorting, which involves selling a stock at a high price and then repurchasing it at a low one. Then, there are derivatives like futures and options, and you may make money by forecasting how much petroleum will cost in the future. Although we can't go into detail about all of that in this video, you get the idea. Mastering the stock market will open up a world of possibilities for you. It's okay if you don't have the time or inclination to accomplish all of that, because investing in an index fund will guarantee you at least a 10% annual return. Using leverage. It's merely a piece of digital paper on your smartphone screen when you buy a stock. Even though you own just one share of stock, you don't have much sway over the company's 5 billion other shares. Real estate, on the other hand, allows you direct access to and control over your investment. Leverage is another option in addition to the potential passive income. Suppose you have $40,000. If you invest $40,000 in securities, you'll get back $40,000. Alternatively, the same investment in real estate might be used to purchase a $200,000 house with a mortgage and tax-deductible interest. What is the best place to put your money? You've got a lot of options. You never know unless you ask. While real estate may provide passive income, the stock market is the best alternative if you're looking for bigger returns, especially if you're an experienced investor with little money to invest. However, it's equally important to consider what excites you. Analyzing businesses and wading through mountains of paperwork may not be for you. Additionally, where you live has a factor. Things may be different in your town or state. As a result, you'll have to make up your own mind depending on your personal situation. As with every investment, there are downsides and upsides. For consumers who contribute frequently to tax-advantaged accounts such as 401ks or IRAs, stock market investing is a popular retirement investment vehicle. When it comes to long-term savings, diversification is essential. To minimize their risk, investors should diversify across a range of asset classes and industries. One of the best ways to limit risk while increasing rewards is through real estate investment. Investing in both the stock market and real estate is a common strategy for many investors. I know you can't immediately invest in both, so which one would you like to invest first? Comment your thoughts below because I'd like to hear them. Thank you so much for watching this video. Don't forget to like and subscribe for more videos like this. See ya!